The crackdown on the tech industry continues. On Wednesday, the central government just announced a 5-year plan that calls for tougher regulation across industries. It doesn't just apply to crypto, it applies to a bunch of other industries. It includes education, it includes insurance. And the result of this is that share prices for Chinese tech companies like Tencent and Alibaba, which are giant behemoths over there, they've been tumbling. SoftBank is talking about holding back on investing in the country. The repercussions of all this crackdown is that people don't want to do business there anymore. And it's kind of startling that they're really pushing this agenda, this control narrative about rating in all of these tech companies, and the tech companies are saying well, that's not really the place for us to do business then. So it's interesting what's going on there. I'm going to throw this to the group. Zach, let's start off with you. What's your take on everything that's going on in China at the moment and the future of the crypto industry in particular?
I think it's really just kind of, again, interesting to get that bigger context, right? So we sort of have this, not, I would say myopic, but, definitely targeted view toward the crypto industry. But to see the China crackdown for the bigger context that it sits in is really important here. And I think that's really quite notable. So that's really my only big takeaway. It's something that I think we're going to see this story unfold for a while here, obviously, as is alluded to in this report. And whether that ultimately hamstrings the development of a really exciting industry or multiple really exciting industries within the tech sector more broadly, I think it's going to be pretty interesting for how it shakes out in the global scene. But yeah, I'm going to toss this to Will. I'm curious for his take. I mean, is there a particular mining angle that you feel is most notable here?
Yeah, I think there's a few different angles to look at this story. And to me, the thing that caught me off guard was that 5-year plan notice. And that's a phrase that's been in communist language since the days of Lenin and Stalin. And now we're seeing it interact with the cryptocurrency landscape, which is just weird to see those two very, very separate worlds collide here with this Chinese regulation. And I think yes, Bitcoin mining has an angle here. Obviously, China cracked down on Bitcoin mining throughout this year. That pressure didn't alleviate. Some people thought that it might change after the CCP's, 100th year anniversary or 50th year anniversary. Forget what it was exactly. On July 1, they didn't leave. That didn't change. In fact, more provinces cracked down on Bitcoin mining even after that date. And it doesn't seem that it's really specific to any one industry outside of just general tech. Tech has just been cracked down on. We noted here on the show a few times that Didi, which is a ride-hailing service similar to Uber in China, has faced tremendous amounts of pressure for its attempts to go public in China, or rather on U.S. markets, and Chinese regulators have not been happy with them. And we also saw the same thing with private education markets. In China, education's public, but it's not as good. So they have private education markets, and those companies were kind of cracked down on by the state as well. So I think we're just kind of seeing continued narrative, which is, it's very sad to see, especially when we're seeing so much uplift from the cryptocurrency markets right now, where there's been a lot of adoption and a lot of enthusiasm around Bitcoin becoming money and Ethereum becoming a public platform for using any sort of decentralized financial application. It's just striking to see these two differences. And we also should just note, it's not just Bitcoin mining, also exchanges were kind of slapped down this year as well. Ben, I want to throw this story down to you. What's your take on this?
Yeah, I think what was interesting to me is this stands in contrast to a letter sent by Congressman Darren Soto, one of the co-chairs of the blockchain caucus here in the U.S., where he explicitly, in relation to the pay-fors being carved out around crypto in the larger infrastructure bill that we've talked about before, he explicitly mentioned China getting an edge on this technology were that bill to pass in full with the language as it currently stands, and pushing U.S. companies and innovative tech offshore, not inside the U.S. So I wonder if that's still kind of going to be a target that can be held up to be knocked down from the U.S. perspective if China continues this crackdown, because I don't think this is going to lead to more innovation. I think the 5-year plan lays out very clearly that there's going to continue to be a lot of governmental scrutiny, regulation, and pushback amongst these companies growing sort of exponentially or out of the control of the government themselves. So I'm curious, because if that bill passes, for example, and sort of innovation in crypto falls a little by the wayside in the U.S. as a result, and China simultaneously cracking it down, I'm curious about where that tech's going to go to develop further, because I don't think it's going away, but it won't be here or there necessarily.
Yeah, just off the back of that, Ben, Congressman Emmer spoke last month in the House, and he warned them about CBDCs, and he looked at China. You know, we talk about what's going on in China as like this thing that's happening so far away, and sure, it affects us. But he said, you know, if the U.S. starts looking at CBDCs as this surveillance tool and pushing crypto out just like it's happening in China, we could be in a lot of trouble. And I think that this is kind of foreshadowing as to what could happen in the United States if we're not careful about what happens with the United States digital currency.